federal government has been forced to backtrack after appearing to blame the Reserve Bank for the floundering economy. Apple and Huawei are going head-to-head with their next new device releases, and the new flexible working trend, chronoworking, is getting a few local fans. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 4th of September, 2024. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, the main story this morning, the question of who is to blame for the flagging economy has caused a few sparks in Canberra. Treasurer Jim Chalmers appeared to be blaming the Reserve Bank and has now been forced to walk back his earlier commentary.
Yeah, Michael, this is quite a spicy war of words. The drama all kicked off on Sunday evening when Chalmers put out his pre-GDP statement, telling everyone it was going to be a pretty soft result, but he also mentioned that rates are smashing the economy. That's basically what high interest rates are designed to do, but it resulted in a flurry of media coverage that he was blaming the RBA. On Tuesday, he was talking it back down, saying he and the RBA are both working well to deal with the same challenge, that being high inflation. Reserve Bank Governor Michelle Bullock is giving 2 speeches tomorrow, so it may well spark up again.
How bad is the GDP data likely to be when it comes out today?
Michael, the Australian Bureau of Statistics will release the Australian national accounts, including gross domestic product, at 11:30am. That's Eastern Standard Time this morning. These numbers will get a lot of oxygen in the next 24 hours and possibly be painful for the government. Yesterday morning, the final inputs were published, prompting economists to refine their predictions that GDP growth in June was the worst in decades outside of the dramatic COVID lockdowns. That is significant.
Yeah, we'll obviously be keeping a very close eye on those on that data when it's released at 11:30 this morning, and the Fear and Greed weekly newsletter will come out shortly after. So if you haven't already subscribed to that, you can head along to fearandgreed.com.au and pop your email address in so that you get all the latest as soon as it happens. Those comments from Jim Chalmers are quite interesting. You can see why he's kind of had to unwind it a little bit, because it does make the Reserve Bank, it kind of politicizes the decision to keep rates as high as they have.
Yeah, Michael, I think that's right. And particularly as we head towards an election, just the attention on anything that could even be political seems to rise up quickly.
Yeah, and as you made the point, Adam, that's exactly what high interest rates are designed to do, that it is designed to cool the economy, to bring inflation back down. So it's just the Reserve Bank is doing exactly what it's supposed to do.
Yeah, and look, the fact that Michelle Bullock is giving 2 speeches, I think not only can we expect something in those speeches, but there'll always be hope too that maybe a few questions get in, and we'll see what those impromptu responses look like.
Yeah, very big few days for the economy, very exciting few days for economists, and we'll have everything this afternoon on the afternoon report and an interview tomorrow morning as well to dissect it all. Let's have a look at local markets. Yesterday, the S&P ASX 200 closed down 0.1% to 8,103 points. Again, recovering a bit over the day after some steeper morning losses.
Yes, Michael, IT and financials were the top performers over the day, with Commonwealth Bank hitting a new high, ending the day up another 1%. The deepest losses were in consumer staples, metals and mining, and materials amid concerns about the Chinese economy and commodity prices. The falls were led by Mineral Resources and Liontown Resources, both down 8.5%. Woolworths fell 2.8% and Coles was down 2.4%. Both of those 2 stocks were trading ex-dividend. Travel business Kelsian Group was a top performer, up 5.8% after posting expectation-beating earnings. Just last week, though, Kelsian Group saw its shares fall 25% after unveiling cost overruns on the construction of its new Kangaroo Island ferry. Myer announced it will shut all of its Sass & Bide retail outlets and instead bring the branded fashion into their department stores, and their shares were flat.
Was it Kath and Kim that used to call Sass & Bide Sass & B-Day?
There must be an episode I've missed, Michael. I hadn't heard that.
Oh, it's always stuck in my head now, and it's one of those things now. Whenever I see it, we've got to go. Okay, got to remember the actual correct pronunciation so that you don't embarrass.
Quite unflattering.
Yeah, it certainly is. Anyway, enough of that. Overseas, still about China.
Yeah, Michael. Well, it's such a profound impact on global trading. The Chinese economic slowdown is creating more attention in international markets and has obviously had an effect in Australia already. Earlier this this week we covered that the large stockpiles of steel coming onto the market are due to a slowdown in residential building in China, but their commodity stash is growing across a range of raw materials, and that includes soybeans and coal. China does tend to hold on to some of the biggest stockpiles in the world of key commodities, and they include also oil and wheat, even in the good times. But now that the economy is slowing and demand is easing too, this is expected to hit prices hard.
Yeah, and Adam, it's been a volatile year this year for the Japanese yen, hasn't it?
It has, and that volatility has pushed the yen to 1986 level lows in June and prompted dire warnings about its trajectory. But currency strategists have done a dramatic U-turn this week and now think the yen will strengthen against the dollar with the Bank of Japan's intervention and the expected interest rate cuts from the US Federal Reserve being behind the change in views. And one other, Michael, from the international scene, the UK Tax Authority, His Majesty's Revenue and Customs, has chosen to stop its ban on fractional shares. It's no longer enforcing its opposition to tax-free personal savings accounts that hold a portion of stock in anticipation of a change in the UK rules in a few months that has been confirmed by the government. Investors holding on to fractional shares ahead of the changes won't be policed due to this quote-unquote pragmatic approach.
Adam, a very quick mention before we go to a break of the interview, the daily interview that's coming up after the show today. It is one of my favourite interviews of this year. Sean Aylmer speaking to Mark Collette, who is the Managing Director of Energy Australia. So he's the boss of an energy company and talking to us about the energy transition. And part of it is about some recent research that was done by KPMG that shows that only 1 in 4 Australians have actually heard of the energy transition, and so, which is to me quite staggering. And I suppose it's because we are talking about it so often on this podcast, and it's kind of such a big feature in the business world. But broadly, outside of that, only 1 in 4 Australians have actually heard of it. And so this is about the challenges for a business like Energy Australia, about kind of meeting the needs of the energy transition. The most basic need, which is to keep the lights on, and the other one, which is keeping prices, if not down, at least predictable, so that people will know what they need to pay. And this is a great conversation between Sean and Mark Collette, the Managing Director of Energy Australia, about all of that. He is a very enthusiastic person about the energy transition and about what needs to be done and about the size of the project, but it is very optimistic about Australia's capacity to actually do it. It is a great chat.
It's actually staggering to me that only 1 in 4 understand about the energy transition. It's an indictment really on us in a way, in terms of the media communicating this. But also you can imagine, just in a cost of living pressured environment, how that's not people's first concern. It's just, I need to pay bills. So what a great challenge.
Yeah, indeed. So stick around for that one. It's coming up after the show. In the meantime, we'll be back in a moment with the rest of the day's business news. Adam, Foreign Affairs Minister Penny Wong used a significant speech yesterday at the Asia Summit to double down on the need for Australia to undertake more investment in the region.
Yes, Michael. Penny Wong pointed out the enormous amounts of cash flooding into Southeast Asia from the US and China, and said Australia is not keeping pace. Despite having a good foundation with the region, she warned Australia is being left behind, and that solely relying on a relationship with China means missing out on the benefit of getting ahead in growing markets and facing more instability and vulnerability. She used her speech to explain that while restoring a dialogue with China and improving that relationship is critical, a large part of the answer to the shifting global challenge is the thousands of kilometres between Australia, the United States and China, and the Indo-Pacific. In the first 6 months of 2024, Austrade achieved a record number of clients in Southeast Asia, up 58% to more than $1 billion in commercial results. That is a good result.
Yeah, indeed it is. Now, the title of the biggest private company in Australia has been won by Gina Rinehart's Hancock Prospecting. Again.
Yes, again. Hancock held on to the top spot in IBISWorld's top 500, and that was reported in The Australian. Second place also did not budge this year, with Visy Industries holding on to that spot. Third place was taken up by Pallion, a gold and precious metals services group, which knocked United Petroleum off its perch and into fourth spot. Get this, Michael. The average revenue of the top 500 companies increased to 719.7 million. That's up from 672.6 million in the last financial year, 2022 to 2023. And 86.8% had higher revenue growth than the year before, and that was up from about 3/4 on the last measure. So this pool of private earnings is growing.
Yeah, indeed it is. I love a good list, Adam. That was what, the top 5 or so. Have you got the other companies that made the top 10 just out of just sheer curiosity?
Fortunately, I do, Michael. So glad you asked. CBH Group came in at 5th. VGW Holdings came in at 6th. HCF, Linfox, Peregrine, and Hutchie's Builders all rounded out the top 10. Chemist Warehouse and St Vincent's Health just missed out.
Oh, Chemist Warehouse. There we go. Well, that won't necessarily be a private company for too much longer, so this might be its last year on the list.
Yeah, maybe not, Michael. And even amongst those names, I think it'd be interesting for listeners to tell us how many of them have they heard of outside of this list, because not all of them are consumer brands.
No, that's a good point. That's a very good point, especially when you look at kind of CBH Group or I hadn't actually heard of Pallion before.
Peregrine? Hutchie's Builders?
No, neither.
Very big companies that not everyone has heard of.
Indeed. Anyway, fascinating list. I love a good list. We should try and include a list every day. Might be making a rod for our own back there.
I'll do my best.
Yeah, all right. Now, big deals. We love a big deal on Fear and Greed, and this could be one of the biggest infrastructure deals of the year. New York-based Blackstone has won out to buy Australian data centre business AirTrunk.
Yeah, Michael, and this big deal I think qualifies as massive. The deal is expected to be worth more than $20 billion, including debt, and Blackstone has emerged as the top bidder for the business, which was launched in 2016. It's only 2016, 8 years ago, and has since expanded across Asia. AirTrunk's majority stakeholders, Macquarie Group and PSP Investments, are looking to finalise a deal, but so far no one is commenting publicly on the tightly held details of the arrangement, though multiple media sources are reporting that it is imminent. A consortium including IFM Investors, Digital Bridge, Global Infrastructure Partners, Silver Lake and MGX also made offers, but have now been pushed out by Blackstone's more generous bid.
Adam, more than half of Australians are running out of cash before payday on a regular basis. That's according to some pretty alarming new data from Finder, which suggests that many are struggling to make ends meet.
Yeah, Michael, I think this is alarming and interesting. Particularly concerning is that 16% of the 1,000 surveyed said they run out of money every single month. And on average, that cohort runs short at about $249 a month, though not just a little bit. What is most worrying is that women were almost twice as likely as men to say they fall short every month, which may well be due to the gender pay gap, among other factors. Those surveyed generally said the cost of living and unexpected expenses were the top causes for falling behind, with too much spending early in the month, a lack of an emergency fund, and high debt repayments, which were also cited as reasons for the cash flow shortage.
But Adam, there might be some good news for home borrowers and those doing it tough right now with repayments. The mortgage wars might soon be back on. Macquarie Bank grew its home loan book at 5 times the rate of competitor banks in July.
That's right, Michael. Australian Prudential Regulation Authority data shows that Macquarie's mortgage business grew by 1.6% to a 0.3% growth in the market average. The Financial Review is reporting that this is a sign that competition is soon to hot up for mortgages, which could help drive interest rates down or spur on some attractive refinance and new loan offers. That's mainly because Macquarie is a challenger bank to the Big Four, and they were a driving force for the 2022 and 2023 mortgage wars by attracting those coming off fixed rates from the big banks. Another sign suggesting there could be better offers soon is that the pandemic-era RBA issued term funding facility ended on 30 June, enabling banks to be more competitive on rates without hurting their margins as much.
Adam, have you ever heard of chronoworking? It means essentially giving workers the chance to pick their hours based on their natural sleep patterns, which is an interesting concept. It's a trend in the UK that may well be taking off locally.
Sleep pattern working. Now, I have heard of that, Michael, and apparently it's all about rethinking the workplace and what constitutes traditional work. The idea is to ditch the 9 to 5 totally and instead let workers pick their own suitable hours. Imagine that. Proponents of the trend think it has the potential to open up jobs beyond geographical borders too. But could it take off here? And maybe. Global recruitment firm Robert Walters, their Australian and New Zealand arm, has asked locals what they think of it, and the response has been quite positive. About 4 out of 10 Australians believe their mental health would improve by getting on board with what you've called chronoworking, and 39% thought it would improve their productivity and focus. Australians are also interested in the 4-day work week. Imagine that too. UK government is currently exploring giving workers the right to request a 4-day workweek model as well.
I don't mind the idea of choosing when you work based on when you sleep and when you are at your most efficient, because you can get 4 hours of really high quality work done, say between 4 a.m. and 8 a.m. and half your work day could be done before anyone else is even at their desk.
And then what do you do from 8 to 12, Michael? You have a little nap?
That's when you have a snooze. Yeah,
little snooze.
Yeah. I mean, it didn't say it all makes sense, but I mean,
selectively.
Selectively. Anyway, it's an idea. It is an idea, and we'll see whether it catches on. Don't know whether it'll take off at Fear and Greed, but we shall watch it with great interest. Turning to international news now. Adam, it is not great news for automakers at the moment. Volkswagen is warning that it's looking at factory closures for the first time in its history in Germany that could slash jobs.
Yeah, Michael, and as you say, this is historic. The iconic car builder behind Audi and Porsche is in the midst of significant competitive pressure and is struggling to deliver solid profits as it looks to transition away from fossil fuel vehicles. It's looking to save billions of dollars in costs as it shifts to producing those less profitable electric cars. Such a decision will put it on a collision course with the local carmaker worker union, that's IG Metall, which has already said it will push back against job cuts and a possible scrapping of job security guarantees. Discussions are going to happen later this week, but it's already looking quite tense.
Now, Adam, for our last story, I'm not going to call this the perfect amount of petty, but I would,
if there is such a thing.
But I'd be interested to see how others will interpret this. China's major smartphone producer, Huawei, has announced a new showcase for its latest smart products, as you do, and it will happen just hours after Apple's already scheduled release of its iPhone 16.
Oh, that's strategic, isn't it? Just hours after. So September 9 is the global date for the showdown between the smartphone giants, and it's going to be a fascinating comparison of technology with Huawei to release the world's first smartphone that folds twice, known as a trifold, and according to Bloomberg, possibly an electric vehicle launch, though that's still not fully confirmed. Apple is releasing its new upgraded iPhones and a raft of accessories. The new iPhone is due to have a bunch of AI-enabled features, better cameras and zoom abilities, and no doubt some more surprises on the day.
Do you reckon it was strategic, or do you reckon that no one looked at the calendar before they sent it out?
Just a happy accident.
Yep, and then they sent it out and they go, oh dear, there's a clash. Oh,
yeah, why aren't we going first?
We've already sent out the invitations. Let's just pretend it's strategic. And now they're getting all this praise for very, very smart maneuvers.
Well, it's quite a good battle, really, as a spectator sport, isn't it?
Oh yeah, head to head. It really is something. Speaking of really is something, Adam, up next is the Fear and Greed Daily Interview, an absolute cracker today with Mark Collette, Managing Director of Energy Australia. I talked a lot about it earlier, so I won't go into it again, but suffice to say, it's a must listen. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you sign up for the free weekly newsletter out in a couple of hours. Thanks very much, Adam.
Thank you, Michael.
It is Wednesday, the 4th of September, 2024. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.